All right. Hey guys, Brad here from Elliott Wave Made Simple. Today we're going to take a look at crude oil, gold, and silver through the lens of Elliott Wave. The first thing I'm going to do is give you levels. Quick and dirty, I'm just going to show you levels where I think the floor and the ceiling is and parameters. That's really what this is about. Once I give you the levels, then I'm going to go back and I'm going to look at the longer time frames, and it's going to become a little bit more of an educational video about Elliott Wave in a more longer term view. But first thing first, let's look at the actionable levels for all you scalpers and short term day traders and scalpers out there, especially the folks in Armando's club. Armando's club is called the Professor Trades. Highly recommend it. Anyway, let's dive into the chart. All right, first we're looking at crude oil. The top from Friday is 71.92. This is very much looking like an impulse higher. It is possible this is already 5 waves. If that is the case, it's not going to get above 71.92 tonight, and it's going to come back and probably catch support somewhere down in here and revisit this zone right in through here, which happens to coincide with the 618 to 764 zone. Now, look, anything is possible with price. So just because price pops above here, let's just say price gaps up at the open. I don't think so, but like anything is possible. Let's just say it gaps up at the open. I would expect it to run out of gas soon after it gaps up. Maybe it makes it to 72.40 before it finally rolls over. Why 72.40? Well, the 2618 is an extension for a fifth wave, a reasonable target. But honestly, from my own years of experience and looking at crude oil, I'm much more interested in the parameters than I am predictions. Having said that, this does very much look like a double top. We see this all the time in crude oil. It loves the double top and it loves the double bottom. Maybe this is a double top almost to the penny, in which case perhaps we're just going to come down directly after the open tonight and into the early morning hours of Monday. And then maybe with any luck, what I'd love to see is that price comes all the way down here and gets into this gray box all the way through Monday morning, leading into the open. Wouldn't it be great then just to see a rip roar of a day on Monday? Now, look, anything is possible, but the parameters I'd be watching are 71.92 to the upside. Would I long this if it pops above there? I wouldn't. I'd be looking to short it. It's possible this is already done 5 up. If it wants to extend and get above 71.92, I'd be looking to short it somewhere up in here around 72.40. I think a more cautious approach. Now, I know if you're a scalper, you don't want to wait for anything. You want to trade, and you want to trade right now. So, these levels would be tradable. So if price creeps higher at all after the open, you could try a short scalp from up here and put a stop above 71.92 and then try to ride it back down for 20 pips, take your gains, and then leave a runner on to try to see if it's going to come down in a more typical retrace target, which is down here. Okay, so first parameter, 71.92. Second parameter, if it wants to come higher, 72.40. I think these are shortable levels. Then for the downside, you really don't want to see it get below the 76.4 fib at 70.28. I think this is buyable. So we're already in a short area. You could wait for the open to happen, watch the price action, observe, is there going to be a gap up? Is there going to be a gap at all? And then really what I'm doing is looking for longs. I took off 2/3 of my longs from Friday afternoon. Actually, I think I took them off here. So it did come up higher. But, I'm still long. So I'm very likely going to immediately take off my longs, especially if it gaps up and then drifts a little higher. I'm taking off all my longs. Otherwise, I'm taking off my longs somewhere in this zone. Hopefully, it won't just gap down a bunch. But those are your 3 parameters for crude oil. Let me just mention this because sometimes you guys don't know who I'm talking about. Armando is the guy who runs a trading club called the Professor Trades. The link to that club is in the description of this video. I highly recommend it. For less than $1 a day, you're going to get actionable trades all day long, actionable levels. If you're a scalper, day trader, being in the club with Armando is a no-brainer. Highly recommend it. Less than $1 a day, you can't miss. All right, let's go down now and take a look at gold. Again, I'm just giving you levels. So gold, it did hold support where we were looking. This did get what I believe is a 5 up. My previous gold video from Wednesday, highly recommend it because this played out literally exactly as what I was looking for in the video. So if you don't know what I'm talking about, I'm going to link that video to the end of this video so you can just click it and go watch that video to really learn more about Elliott Wave and to see how price followed through. Not because I'm predicting the future, but I'm using parameters, and Elliott Wave gives you outstanding parameters. In this case, it really proved its value, especially if you want to learn, go back and watch that other video. But gold came down and caught support. So I'm going to view this as a 1-2. So now I think the minimum target, if you are not long, I don't have a problem with getting long now. I mean, I'm already long from Friday, somewhere in here, just a scalp, but I left it on. So the idea is 1618, which is 2784. If you're a scalper and you're already long, you get above here, that's a minimum target. The ultimate target for this fifth wave is going to be somewhere up here. Call it 2820, I think is a reasonable target for gold longs. So the parameters are very simple. The 1618 is at 2785, minimum 2785. And we're currently, so you're looking at $25 roughly from here. Now, is this going to keep going higher? No, it can rattle around, but absolutely at no point in time should price come back down below 27.29. At no point should price come back below 27.29. I think this is just going to go directly higher. You know, what do I know? Just looking at these levels, these parameters. So I know that's a wide parameter. So if you want something a little closer, I would consider that this low right here, 27.4670. If you're a bull and you want to go long here, I wouldn't want to see it come back below there, but I wouldn't stop out there either. The real stop level, the way I'm looking at this structure, is 27.29. Just call it 27.30. 27.29, 27.30. That's your stop, your real stop level. But, you know, if you're looking to get long, just wait. See if this comes back at all. If it just keeps going, you know, if you want to take a chance and buy the momentum, just buy it at the open. But know that price never moves in a straight line. So the real parameter, 27.30, and then the first upside target, 27.85, and I think the minimum ultimate upside target is 28.20. 28.20. Okay, so there are your parameters on gold. Let's look at silver. Very similar thing to silver. On Friday, if you're in the club, you know I've been tracking this, and you know I got it pretty daggone close, man. I thought it allowed for potential for this to come down one more low, but this thing is almost perfection, really. This didn't give you the one more low, but we were warning you about this and tracking this and telling you the 2618, just as I showed you in gold, or was it oil? Sorry. The 2618 is a very reasonable target for a wave 5 to terminate, and that's what we got here. This came up, and I was originally thinking this could be the low, but once this came up and failed to continue and just came down and made a lower low, got me going on these measurements. This is like pretty much perfection. A, B, C. Correction, just shy of the 100 fib. But then look, we got 5 up, and then now we've got this retrace. So here is the question with silver. 33.68, which is this last low. Is that low going to hold? Okay, so if you are feeling like you missed something and you want to get long, you know, if you're scalping, you could go long here, go long at the open. And then the first reasonable level to watch is 33.68. The thing is, it's possible that this is an A wave and then you're getting a B wave bounce, and you're still going to get one more shove down to retest this level. Now, I'm already long and I'm staying long, so I'm not, well, although I took off a bunch on Friday. I came to my senses late Friday afternoon, and I posted this in the Professor Trades Club. I took gains on the majority of my long position, looking to reload it. I have not reloaded it, but the parameters are, If you get above 34.19, I think it's just going to rip. In fact, I would put a box right here. Sorry, my kids are around. A buy box. And the idea is if you can get a 1 hour candle close above this level, I like that idea as a buy signal of sorts with the ultimate target much higher. The ultimate target, just call it 36.40, 36.37, 36.37. So $2.50 higher than this general range. So I know if you're a scalper, you don't want to take that much heat, but basically, as long as this last low holds, I know that's a lot to ask. That's way down here, almost 30, just call it 33.25. I know that's a lot, right? That's like a 50 cent, 60 cent range, but I just want to be mindful. Until we get above 34.19, it's possible that this comes back down to retest this low. I don't think it's going to come all the way down here, but that's really where the proper stop should go based on structure. So now I'm going to give you additional value that I've learned from Armando. Trade small enough so that you can withstand the proper stop based on structure. So I think a proper stop based on structure is more like 33.25. So those are your parameters, okay? The initial downside parameter is 33.68. Does that mean I'm going to sell panic? And no, I'll be adding if it comes down below 33.68 a little bit. I'll add small because remember, I already took off 2/3 of my position over here on Friday afternoon, somewhere over here. I took off my gains, not all of them. So the idea that I'm going to add it back. Okay, so those are the parameters. Now, I just take a moment here and say thank you to all you guys who've bought me a coffee. I love it. What am I talking about? The coffee link is below in my description of this video. I appreciate it. It encourages me to keep going. All right. The other thing is the link to Armando's club called the Professor Trade is also in the description of this video in the area just below. So for less than $1 a day, you're going to come in, you're going to get massive value and a lot of good educational stuff that's going to far exceed what you're actually paying for. I promise you that. All right. So now let's take a look on a little bit more educational basis. Let me just show you what's going on with crude, looking at the daily. This thing is just a horrible looking structure. It's overlapping and it's moving in threes. So I think what's happening, this is 1, 2, 3 for a wave 1. This gave you a 3-wave move for a retrace. And the next wave 1 is very likely going to be composed of 3 waves as well. So now if I want to go look at a 4-hour chart, this is where I'm going to make some changes because I have not adjusted this chart. I was originally looking for wave 4 to terminate up here and come down and cough up one more low. I don't think that's going to happen now because of the internal structure, which I just showed you on crude oil down here. Right? Because of this impulse up, I don't think this count is correct anymore. So some people give me grief every now and then about, well, you change your labels, you'll be right eventually. Okay, you don't understand, but you Elliott Wave guys that do understand, you're about to watch me adjust my count based on the most recent price action. You know, until price came up off of this low impulsively, then I'm still looking for one more low. But now I'm not looking for one more low. So what I really think is going on is this gave us a 3-wave correction down as an A, B, C. Okay, and I have to adjust the degree just to keep my chart somewhat consistent. A, B, C, and then now what we are very likely about to get is another A, B, C up for wave 1. So now I'm going to get rid of all this. I'm not looking lower like I was before based on the new information that we got on Friday in this price wave. So now if you want to measure for potential target, we're going to use my yellow fibs, which if you've been following me at all long enough, you know that the yellow is what I'm looking for in a 3-wave move, which we'll label as ABC. So this is 69.77. 69, 7. You have to excuse my children. They're little, might be making noise, trying to keep them quiet in the background. So what we're doing here is looking for the yellow fibs. So a minimum target would be 74. I think a more realistic target is to come up a little higher, and maybe price wants to target that last local high. There's wicks right up here. So I really like this as a potential area for rejection. And it's also a good area for a target. So keep that in mind. And now you understand why I'm looking for those targets up here. Just call it 75 minimum. 75 minimum. So, but more specifically, as I've just explained, we're looking for a pullback. So whether this gives one more high, do I think this is going to rip higher and keep going? No. Price never moves in a straight line. What we're looking for is this already did 5 up, or is going to come, maybe it reaches up here to this next fib to get a bigger 5 up. And if it does come above and make a new high above 71.92, I'm just going to move. This is so funny. People criticize, oh, you move your labels. Well, of course I move the labels. So here's an example of how I'm just telling you now how I'm going to move this. If price comes up and gets above 71.92, eventually it's going to stop going higher, and then it's going to come back down. And when it does, I'm going to grab this gray zone and I'm going to move this to the top of whatever price wave tops and starts moving. I'm going to move this up, and then this becomes a target. So is there really a huge difference between, me leaving this here versus raising it if the price comes up? No, because I still think it is in a topping region somewhere up here. And then what I'm going to do is layer into some longs from the retrace. And with crude, given how it typically moves on this nano level, it almost, for a wave 2, it's almost always going to give you at least a 50% retrace. So maybe it's already topped, maybe it hasn't. But now you understand why I'm looking up here higher, and why I'm also, everything in crude has been moving in threes for a very long time. You can plainly see that going back in this whole year. Look at this price action. It's just ugly. It's moving in threes all over the place. So I'm just going to consistently give it the benefit of the doubt that it's going to continue to move in threes, which means that's why you see a lot of yellow on my charts. All right. So that's the deal. Want to be long, but I think it pulls back first. All right. Now let's take a look at gold. And really, there's not much more to add. I don't want to look terribly much at the longer time frames, but this is it. This is the longer time frame, the daily. This is what we were looking for. I've had this box on my chart for almost a year, honestly. And here we are, finally in the target box. And I think it's going to come up higher. Now, let's just take, actually, I already did that, didn't I? This 28.15 to 28.20. Remember, I was just telling you, just call it 28.20 for a reasonable target to the upside. Smack in the middle of the box. There are fibs up here. There's a ratio box. There's these purple fibs. There's these white fibs for wave 3. Absolutely a great target. So this is it. This is why I'm thinking and warning that we could get a multi-month correction, multi-month long correction that goes well into 2025 once gold tops out. Why? I'm not saying that based on my opinion. I'm not saying that based on news. I'm not saying that based on geopolitical. I'm not reading a single article about any of fundamentals related to gold. I am simply looking at Fibonacci and Elliott wave to inform my view of the market. Okay, so that is the longer term, more comprehensive view of gold. And I know this chart is messy. This is kind of my homework chart. I could kind of clean that up. I will clean it up eventually. But for the last educational thing, and again, for people who want to criticize Elliott wave for, well, you just move your labels. Well, of course I move the labels, because if anybody who can tell me where market's going and never change their view, find me that person. I'll wait. Go ahead. Go ahead. Or maybe you can post your charts that don't change and you can show me your method that never changes and you don't adapt to what the market is doing. I'll wait. Go ahead. Okay, so originally we were thinking this could be a B wave and we get one more C wave lower. But because this looks very much like an impulse higher, and because of where it caught support, I'm going to get rid of the ABC. I think this is far less likely now that the 4 gives you a deeper 4. And it's more likely that the 4 is done. Does that mean that it is? No. Of course I could be wrong. This could be a B wave. It is certainly in the type of area where you would expect a B wave, but because this price action is impulsive looking up off of this low, and also where it caught the low, it's perfect retrace for a wave 2. So that's why I'm thinking that the bottom, the low is in, and the wave 4 actually terminated between the 382 and the 50% fib, which is very typical. And it also, I don't talk a lot about this, but when wave 3 strikes the 1618 and terminates and starts rejecting, it's not unusual at all for wave 4 to hold support around the 100 fib of this impulse structure that is projecting higher. Let me repeat that because this is a good educational moment. To track a wave 4, if the wave 3 terminates in the region of the 1618, you could reasonably expect the wave 4 to catch support around the 100 fib that is related to that 1618. And that's exactly what price did. Look at that. It came down within a few dollars. Let's see, what is that low right there? 27.45. So yeah, $25. It came down within $25 of the 100 fib, and it's also inside the 382 and the 50%. So, and it also is in the price territory of the previous smaller degree wave 4. So there's like 3 ideas that are suggesting this could be the low. But what we wanted to see is an impulse, a retrace, and then a break of that high. So in other words, wave 1, 2, and then now we broke that high. So yeah, it's very likely that we are going to go higher now into that box. I just realized I did not, wait a minute, maybe on the lower time frame I did. Oh yeah, so I did put the new measurement for this lower time frame on this chart, and the next 1618, that's why this is a target. The 1618 is as if this is a 1, 2. So the next wave would be a 3 targeting at least the 1618. And since we're talking about the 1618, since I'm doing a little bit longer video right now to keep it educational, look at where this wave 3 terminated. Very near the 1618. And then you got a 3-wave pullback for wave 4 that came in between the 236 and the 382 fib for wave 4. Then the next wave 3 targeted this other 1618. So I've just shown you 2 1618 fibs. And then on this lower degree that we just showed you now, this is the third 1618 of the same overall structure. And this whole thing is a much larger degree wave 3 that is actually extending. But let me go back to my daily chart. Oops, and this is the much larger degree wave 1, wave 3 that is targeting this 1618, and I believe it's going to exceed it a bit. Okay, but this is the zone, and the 168 is right there. It doesn't mean it has to hit it to the penny, right? I just showed you where it extended beyond this one a bit. So on a much larger scale, if it's going to extend on this scale, it could extend a little bit and still come up into this ratio box up here. Absolutely reasonable. So now I've just shown you 3 1618 levels that are in play because this is a standard impulse. All right. Okay. So I'm just dropping you massive value here in this video. If you like it, give me a thumbs up. If you're learning here, give me a thumbs up. And if you're new and you're finding massive value, especially if you're new, but you've been trading this work, maybe in gold, making massive pips, be sure to subscribe, hit the notification bell. So when I drop a video, you know what's going on, and you can come in here and if you just want the parameters, you just watch the first 5 minutes, grab your parameters and roll. If you want to keep learning so you can learn how to do this for yourself, which is what I prefer, then stick around, get the subscription, keep watching the videos, and keep coming into the Professor Trades room and asking me questions. All right, so now we're looking at silver. Last thing, kind of similar to gold, we are looking for the next ratio box higher. This very likely has bottomed down there. So we are looking for silver to come up at a minimum of 36.40, if not higher. And all of this is a larger degree wave 3. That's what we are looking for. man, this is exciting time in metals because metals is really not disappointing. The last couple of months, couple of weeks in particular have been exciting. So this is the deal. This is what we are looking for in silver is a 1, 2, 3 to come up somewhere into this zone. And metals, when it breaks counts, it typically likes to break them to the upside when it's in a full-on bull mode. You see extensions. So, this would already be a nano extension if it can make it up here. Here's the fibs that I would be looking to get hit. The 2382 comes in at 36.76. The top of this ratio box is 37.15. Can you believe that we are talking about these levels? If you've been following me for a while on silver, first I was looking for 33, 34, and I've also mentioned the 36, 37 level from a while ago. It's not because I'm any smarter than anybody else. It's just I'm using Elliott Wave, which is really good at showing you targets, projections off into the future. You can learn how to do these exact same types of projections. So that's what I'm looking at here. 1, 2, 3, 4, 5 to finish off this wave 3. Parameters are clear. I've already gone into that. This is the way it looks on the 8-minute chart. These are the fibs. So the 1618, and you notice I'm talking about the 1618. It doesn't matter what the instrument is. The 1618 is just what it is. It's the extension, a bullish extension that is taken from a projection off of a 1, 2. This is where the wave 3 projects to. So the trick is determining 5 up for wave 1, followed by a 3-wave retrace. Now, do we really have a 3-wave retrace? And I've also mentioned to you, by the way, while I'm zooming in on this to try to determine is that a 3-wave retrace? You'll know that I've said in metals, when you get a wave 2, sometimes when it's in a hurry, it's going to give you a shallow wave 2, which could be the 382, could be the 50%. Whereas typically in like, say, oil, for example, it almost always retraces between the 618 and the 886. It's only when the bull is in a really big hurry that it might come up shallow. And silver loves to give you shallow corrections for wave 2s. Sometimes it's almost not even discernible. This structure, it doesn't look beautiful. I don't really see a B wave. In other words, what I'm saying is the bounces, it just looks rather symmetrical. A bunch of very small retraces. This just kind of chugged its way down here and then now is bouncing from this area. What is much more convincing to me is that this is an impulse. This is 5 up. The nature of this pullback is not entirely clear to me. So it did come down to the 50% and it did bounce. But, let's do this. I don't want you to get hurt. I'm very much interested in your protecting and preserving your account, and I don't want you taking losses, especially if you're looking at my charts and not fully understanding the potential and you just start trading my chart and get hurt. I hate to think of that. Really don't want to think about you getting hurt trading my work. So I'd rather teach you so you know what you're looking at. All right, 33.68.5 is that last low. 33.68.5 is that last low. If this is a B wave, what is more likely to happen is that it's going to bounce and not make a new high. 34.19.5, 34.19.5, bam. So if this is going to come down and give us one more low, it is not going to make it up through this zone. Okay, so be careful. Be careful. I'd rather buy it if it breaks out, or scalping for sure. Scalping here and put your stop at 33.68. But it is possible for this to be something. This is all I'm doing is warning you because I don't know the future. This is nano stuff. It is possible if it wants a deeper correction that you get something like this. Otherwise, it's going to come up here. This is what I hope happens, but it doesn't really matter what happens. I'm either going to buy it up here or I'm buying it down here. Or if this, that's really the better way to play this. Buy it up here or see if it comes down and gives another low and buy it down here. All right, guys, that's what I got. Thanks for watching. If you're getting value, like it, subscribe, hit the notification bell. I'll see you in the Professor Trades room. Have a great session. See you on the next one. Bye-bye.